Today we're going to look at Barrick Gold to see whether it's a buy or not. The gold price has run way up at the same time the stock price has done basically nothing. So maybe this is a good time to get in because the market hasn't recognized the potential of Barrick yet. We're going to dig into that today, and before the end of this video I'm going to give you my outlook for the company, my target price, and what I think the risk level is for this investment. As always, don't take any of this as investment advice, and always do lots and lots of your own research before investing any of your hard-earned money. Barrick Gold trades on the New York Stock Exchange under the ticker GOLD. And to start out, I want to tell you some things I like about the company. To start, Barrick has the best pipeline, by far the best pipeline of any of the major gold producers. The company is going to be growing a lot in the coming years, and the counter argument to this would probably be like, well, if you look over the past years, the production has actually been declining. And that's true. However, since Mark Bristow took over as CEO in the merger of Barrick and Randgold, well, he's been investing for the long term. And those long-term investments are going to start paying off within the next few years. Something else I potentially like about Barrick as an investment today is that the financials and the results for Q1 of 2024 were pretty ugly, and Barrick got punished for that. However, throughout 2024, we should see production going up each quarter and cost coming down each quarter. So this should be a nice tailwind in the stock price this year. Something else I like about a Barrick investment right now is what's going on with their big Dominican Republic mine. That mine is called Pueblo Viejo, and they have a conveyor belt there that was down. And that was down all of the first quarter, but it got up and running just 2 weeks into the second quarter. So because that conveyor belt is now running and has been running most of the quarter, that should help improve Q2 numbers a lot, because this Pueblo Viejo mine is very, very important to Barrick. So Q2 numbers should be a lot better than Q1 numbers, and then Q3 numbers should be even better than Q2 numbers. Something else that should be a really strong tailwind when it comes to Barrick having great numbers in Q2 relative to Q1 is the change in the gold price. Barrick isn't getting credited for the change in the gold price at all in the market, and in Q1, the average price that Barrick sold gold for was $2,070 an ounce. However, in Q2, the average gold price should be at least $2,300. So that is going to make an enormous difference in the bottom line. And it's also worth mentioning that the copper price is way up from Q1 to Q2, and Barrick produces quite a bit of copper as well. Another thing that will be helping Barrick's numbers in the coming quarters is Porgera's ramp up. So if you don't remember, back in 2020, Barrick's Porgera mine didn't get their permit renewed by the Papua New Guinea government. So they had to go back to the negotiating table, and they've been negotiating with the government to get this mine back into production, and it's finally back in production, and the ramp up is happening right now as we speak. So each quarter going forward, this mine should contribute more and more to Barrick's production. This isn't going to make a huge difference, especially in Q2, but every little bit helps. Something else I like about Barrick is since Mark Bristow took over in 2019, they've realized 140% replacement of mined reserves. So their gold reserves have been steadily increasing despite mining about 4 million ounces of gold each year. Something that the market has punished Barrick's stock price for are their decreasing grades. Like for example, if you go and read the most recent quarterly report, in almost every single mine that Barrick has, they show a pretty significant decrease in grades relative to last quarter and relative to last year. However, when you're looking at the long-term production profile and what the grades might look like in the future, you got to look at the grades of the reserves. And while they've been growing their reserves, they're also maintaining their grade. So even though the grade of the gold that they're mining has been going down recently, the reserve grades have been staying the same. Something else I really like about Barrick is they have huge gold reserves, 77 million ounces. After taking into account the company's recovery rate, that's about 17 years of gold reserves, and they have many, many more years of gold resources in the measured and indicated categories if you include those. So they have a long pipeline ahead of them to mine gold for many years to come. Something else I really like about a potential investment in Barrick Gold today is that, as I mentioned earlier, they were really punished for their Q1 results. However, Barrick's Q1 is always their worst quarter because that's when they plan most of their maintenance and that's when they plan most of their mine shutdowns to do their maintenance. So Q1 is practically always their lowest production quarter, and also when you have lower production, your fixed costs are spread out amongst fewer ounces, so you have higher cost as well. So because their planned maintenance and planned shutdowns are over with, in quarters 2, 3, and 4 of this year, we should see better numbers and therefore a higher stock price. Something Barrick gets punished for in the market is their jurisdictional risk profile. However, something I like about the company is that even though they do have a lot of jurisdictional risk, it's spread out across many different jurisdictions. They have 13 different mining complexes around the world, so there's not one single risky jurisdiction that makes up a significant portion of their production. I mentioned that Barrick has 13 mining complexes around the world. Well, something else I really like is they have excellent assets. I think they have the best asset portfolio of any gold producer. 6 of those 13 are Tier 1 mines. And Barrick defines a Tier 1 mine as one that has 5 million ounces of reserves or more, but importantly, at $1,300 gold. So assuming the gold price was just $1,300, that they could put 5 million ounces into reserves, which would sustain production of at least 500,000 ounces a year for at least 10 years in the bottom half of the industry cost curve. That is a very rare beast, and Barrick has 6 of them. I mentioned earlier that Barrick is replacing more reserves than they're mining, but importantly, they're doing that with no acquisitions. You could argue that their big competitors are also more than replacing reserves, but their competitors like Agnico Eagle and Newmont are doing that through acquisition. And yes, their reserves have grown a lot, but because of those acquisitions, so have their share counts. But over that period of time, over the last 5 years, Barrick's share count has actually gone down a little bit, and they've done no acquisitions and have been replacing reserves despite those things. And the reason they're able to do that, replacing reserves without acquisition, is because they have such good assets with enormous geologic potential. I mentioned earlier that Barrick's production profile has been declining over the past number of years. However, that ends today. That ends in 2024. Going forward, Barrick's production should be flat or increasing every year for the foreseeable future. Something else we have to look forward to in Barrick is their growth profile. Right now, in terms of gold equivalent ounces, or GEOs, Barrick is producing about 4.9 million ounces a year. But by 2028, that number should grow to 7 million gold equivalent ounces. Right now, it's about 4 million ounces of gold and the rest is copper. And most of this growth here is coming from copper. So you have to be a copper bull to want to own Barrick. And I am. I'm very, very bullish on copper. But because I like both gold and copper, I like Barrick a lot. And when it comes to choosing between the major gold producers, Barrick has the best insider ownership by far. Mark Bristow, the CEO, owns about 10 times his annual salary plus bonuses in shares. Now that's really rare. In fact, most of the time, the CEO owns less than 1 time their annual salary plus bonuses. But Bristow owns about 10 times. And as a matter of fact, Barrick management is required to own at least 5 times their base salary in shares. So because of this, of the major gold producers, Barrick is the one that's most aligned with shareholders. Something else I like is that Barrick's dividend is likely to increase soon. So they have a dividend policy where they pay a base dividend of 10 cents USD per share per quarter, or 40 cents per year. And then on top of that, they have a performance dividend based on the net cash balance at the end of each quarter. So if the net cash balance is positive, that's where the performance dividend starts to kick in. And I suspect that we will likely see that performance dividend kick in quarter two. And if not in quarter two, almost certainly in quarter three. And when the performance dividend kicks in, we're looking at least a 50% increase in the dividend. Something else that's good for us who are considering an investment in Barrick is that despite the huge run-up in the gold price, Barrick's stock price basically hasn't moved at all. And because there's going to be things that are going to be helping the financials in the future quarters and the future years, I think soon is when we see the stock price start to move. Something else I like about Barrick is that when institutional money starts to come into the sector in a big way, these sizable institutions only have a handful of options of gold companies that can handle their amount of purchases, because the company has to be extremely liquid and it has to have a big market cap. Otherwise, the company can't handle those big orders that these institutions need to be able to place to make any type of difference in their fund. So when it comes to gold companies, I think Barrick Gold will be one of the top choices for institutional investors. Okay, so that was a whole lot of things that I love about Barrick. However, it's not all good things. There are some things that I don't like. Number one is that their mined grades have been coming down. If you're reading their quarterly reports, if you're following their annual reports, you'll see that at most of their mines, it's saying, hey, the grade at this mine decreased from this to this, the grade at this mine decreased from this to this, and it's almost all across the board. However, as I mentioned earlier, the reserve grades are staying flat. So that portends well to their future production because they have about 17 years of reserves left at pretty good grades. So perhaps it's just the fact that right now they happen to be in low grade parts of the mines and then they're going to go to higher grade parts later on. But that's how mines work. Like there's high grade parts of the deposit and there's low grade parts of the deposit. So if you're mining in an open pit, for example, you'll hit some high grade areas and then you'll hit some low grade areas. And then you maybe go back to high grade areas. So the fact that there's that variability, it can make the mine grades go up or down from quarter to quarter or from year to year. And at the same time that grades have been going down quite a bit, costs have been going up. But grades and costs are related because as you have lower grades, you have to move more tonnage of rock to produce the same amount of gold. And moving tonnage costs money because there's labor costs and equipment costs and energy costs. So grades make a big difference in costs. But also costs are up for other reasons. They're up because of general inflation. Now at the same time, Barrick has been investing a lot of money to try to keep costs down. For example, in the most recent quarter, they just completed 2 massive solar projects, one in Nevada and one in Africa. And those solar projects are going to help keep costs down for 2 reasons. Number one is a lower electricity cost because now they're running part of their mine or all of their mine off of solar energy instead of diesel or gas. And then also, in addition to that, they were spending a lot of money to build those solar plants. And now that spend is done. So that's one example of things that should help with costs in the coming quarters. Something else I don't like is that Barrick has consistently missed production guidance for the last few years. Now, if you ask Mark Bristow why they keep missing guidance, he'll say it's because he's an optimist. And he gives optimistic guidance because that's what he thinks the company will be able to do. Now, arguably, maybe you need to be an optimist to be in the gold mining sector. But even if you're an optimist, I think you can still give more conservative official guidance so you're not disappointing investors quarter after quarter. So the consistently missing guidance is one thing that I don't like. And this makes me think that I might not be able to trust their guidance going forward. Now, maybe you could argue that their misguidance is because of some bad luck they've had. And while that's true, this is the mining industry. There's a lot of stuff that can and does go wrong. So I think it's reasonable to account for some things going wrong when you give your official guidance. We touched on this a little bit earlier, but something else that's bad about the company is that in recent years they've had a declining production profile. However, as I mentioned earlier, in 2024, I think that changes, and from now on, it's either flat or up. And another thing that's bad about the company is its jurisdictional risk. And Barrick operates in a lot of very risky jurisdictions. But because of that, they trade at a pretty good discount relative to some of their competitors. Personally, I'd rather get a big discount and have a very diversified portfolio of assets in risky jurisdictions than pay a big premium for assets in safe jurisdictions. Now, they're not all in risky jurisdictions. Like, they have their Hemlo mine in Canada, they have their Nevada gold mine complex in the US, and those mines account for a substantial portion of their production. However, they have a mine in Congo, they have a mine in Tanzania, they have a mine in Papua New Guinea. They operate in a lot of risky jurisdictions, and they're expanding into other risky jurisdictions. For example, they're just about to build a gigantic mine in Pakistan. They do get punished for their jurisdictional risk, but in my personal opinion, I think they get punished too much for it because they have such great diversification across those risky jurisdictions. And something else I don't love about Barrick is their Mali risk. Of all their jurisdictions that they operate in, right now I think Mali is the worst. So there was a coup a couple years back that overthrew the government, and now Mali is being run by the military. And I think they're looking at the gold miners as their cash cows to continue funding the government and to continue putting lots of money into the rulers' pockets. It seems like they're trying to squeeze the gold miners. There's been rumors going around that Mali plans to nationalize Barrick's big mine there. However, the Mali government has said to Barrick in writing that they don't, that they plan to work with Barrick as a partner to continue operating that mine. Personally, I think those Mali risks are overblown. However, it's not a good place, and it has caused a substantial decline in Barrick's share price. But I think this is potentially an opportunity to help us get in at a good price. So there are some bad things about the company. However, I think the good things about Barrick far outweigh these bad things. And another really good thing that I forgot to mention earlier is I think Barrick has some of the best management in the business. I think Mark Bristow is one of the best CEOs in the business. Yes, he has missed guidance for a few years. And yes, there have been some problems, and yes, the share price hasn't performed well. But remember that he's investing for the long term, both in terms of intellectual capital and actual capital. He's been negotiating with the Papua New Guinea government to get that Porgera mine back into production, and now it is back into production. He's been negotiating with the Pakistani government to get that Reko Diq project into production, and now that project's advancing. He successfully negotiated with Newmont, something that previous CEOs had been unable to do, to combine their assets into Nevada gold mines and realize a bunch of synergies and a bunch of cost savings there. That's something that should have happened many years ago, but it didn't until Mark Bristow took over. Yes, it's true, we haven't seen the benefits yet. We haven't seen an increasing production profile yet. We haven't seen decreasing costs yet. We haven't seen an increasing share price yet. And he gets a lot of flack for that, and Barrick gets punished by investors for that. But looking into the long term, looking into the coming years, I think these numbers that we see Barrick putting out are going to get a whole heck of a lot better. Maybe I'm wrong, but that's how I see the situation unfolding. Now let's look at the company's valuation. Barrick is giving guidance for 2024 of gold and copper. So gold is between 3.9 million ounces and 4.3 million ounces at an all-in sustaining cost per ounce of between $1,320 and $1,420. And then copper, we're looking at 180,000 tons to 210,000 tons at between $310 and $340 per pound all-in sustaining costs. So with that information, let's look at what their cash from operations might be going forward. Using today's gold price of $2,333 and today's copper price of $4.48 per pound, we're looking at cash from operations annualized of $3.99 billion if we come in at the low end of guidance. And if we come in at the midpoint of guidance, we're looking at about $4.5 billion. I'm not even bothering with the high end of guidance here because Barrick in recent history keeps missing their midpoint of guidance. So they're usually coming in at this number or lower. We're going to save these numbers for later, but now let's look at what the cash from operations might look like a few years from now after their big expansion projects get built and they're producing at a much higher level than they are today. In the coming years, Barrick's gold production should grow modestly to about 4.6 million ounces a year, and their copper production is really going to grow a lot, almost doubling to about 690 million pounds a year. And for gold, they say that their all-in sustaining costs company-wide are going to be slightly over $1,000 an ounce. I'm going to make this more conservative and say that it's going to be $1,200 an ounce, and their all-in sustaining cost for copper company-wide, they say, is going to be around $2.50 per pound. But again, I'm making this more conservative and putting that at $3 per pound. So using that, let's look at what the cash from operations might look like in 2028 using a gold price of $2,000 an ounce, today's gold price, and a gold price of $2,500 an ounce, and then adjusting the copper price a little bit up or down accordingly. And by the way, the growth in their gold production is going to be because of their Gold Rush underground project, their 4 Mile project, and their Pueblo Viejo expansion. And then copper is coming from their Lumwana Super Pit project as well as their Reko Diq project. So all this growth here is coming from 5 different projects. So in 2028, assuming this production level at these costs, at this low-end price assumption of $2,000 gold, we're looking at about $4.37 billion of cash from operations annually. At today's gold and copper prices, $6.23 billion, and at the high end of $2,500 gold and $5 copper, it's $7.36 billion. And by the way, I would be very surprised if in 2028, copper's only selling for $5 a pound. But when looking at these high-end assumptions, especially for the copper price 4 years from now, I would be shocked if the copper price wasn't higher than $5 per pound, because we can clearly see that the demand for copper is increasing every single year for many years, and also we can see what new copper production can come online within the next few years, because it takes a very, very long time to find and develop and build these big copper mines. So it's pretty clear that there's going to be a huge copper shortage in the coming years. So I think $5 is pretty darn conservative here. If we assume that in 2028, the gold price will be where it's at today at $2,333 an ounce, and the copper price, instead of being $5 or $4.50, will be $7, we're looking at cash from operations of $7.97 billion annually. So that's using $7 copper and today's gold price. And just for fun, let's calculate a very bullish scenario in which Barrick actually hits their price targets, their all-in sustaining cost targets for gold of about $1,000 per ounce and copper of about $2.50 per pound. And let's calculate this bullish case scenario using a gold price slightly above where it's at now at $2,500 an ounce and a copper price of $7 per pound, which I think is pretty reasonable 4 years from now, considering what the supply and demand picture is going to look like. And this would result in an annual cash from operations of exactly $10 billion. So using these 2024 numbers, let's look at what Barrick's share price looks like today, whether it's undervalued or fairly valued. And using these numbers, let's look at what the Barrick share price could be in 2028 to see what our potential upside is. And now we're coming to a pretty subjective part of the valuation process, and that is assigning some sort of cash flow multiplier to Barrick. Now, when I'm doing this, I'm usually comparing it to what I've given other companies and whether I think Barrick is a better or worse company than somebody else. So when it comes to things like that, I'm thinking, okay, Barrick has great management, they have very long life assets, they have very high quality assets, and also they've been able to replace reserves, actually more than replace reserves every year, and it looks like they're going to be able to continue doing that. And remember, their reserve grade is staying stable. So even though the grades they're mining have been declining, The reserve grades are staying stable, so that's very important to the future valuation of the company. And the company is well run. They get punished for having political risk. However, they get a boost because they have a huge growth profile. With all of those pros and cons that I was talking about earlier taken into consideration, I'm going to give Barrick a 10 times cash flow multiplier. This is going to be our formula to find a fair market value for the share price, both today in 2024 and in the future in 2028. So that's going to be cash from operations, which is going to be either this number or one of these numbers, minus other operating expenses. So this is $181 million was the most recent number of the trailing 12 months from the income statement, minus net interest expense. Again, this is from the trailing 12 months, so that can be found on the income statement as well. And then we're going to take that number and subtract the net debt of $724 million. So that's the company's debt minus the company's cash and cash equivalents. And then we're going to take that whole number and divide it by the shares outstanding, which is 1.755 billion shares. There's been a couple comments in previous videos of people saying, hey, you're double counting the debt here in your formula, and that isn't right. But you know what? This is just my formula that I use. And if you think it's more fair to change this up some way, that's very reasonable because I came up with this. I didn't pull this from anybody else. This is just the way that I like to value companies. And I don't feel like I'm double counting the debt here for this reason. So if you have debt, you eventually have to pay off the principal balance of that debt. And until you do, you're paying the interest expense every year. So I think it's fair to subtract the interest expense before you apply the cash flow multiplier, and then also from that to subtract the net debt from the total because it has to be paid back eventually. Does that make sense? Anyway, there's some people who like to do this differently, but this is the way that I like to do it. And you might notice that I excluded general and administrative expenses here, and that's because the G&A expenses are already included in Barrick's all-in sustaining costs. And now we're going to look at what the fair share price might be in 2024 and also what it might look like in 2028, assuming Barrick can deliver with what they say they're going to deliver. Today, Barrick is trading at a share price of $16.02. And based on my calculations, if Barrick hits their low end of guidance, a fair share value is $19.39 at today's gold and copper price, which is an upside potential of 21%. Or if Barrick hits their midpoint of guidance, we're looking at a share price of $22.19 or 38% upside from here. So considering it's a major and they're very well diversified and well run and they have a great growth profile, this looks like a pretty good buy here. But importantly, I want to look at what Barrick's share price might look like in 2028 after we see their upcoming growth. Before I get to the potential 2028 share price numbers, let's talk about what I think about this investment. First, the risk level. This is 1 being the least risky, 10 being the most risky. So this is a gold producer, and this is a risky business to begin with. So the lowest rating, or the safest rating, I will give a gold producer is a 5. Barrick has quite a bit of political risk, but it is diversified political risk. And there's also going to be a risk involved in building these new projects and building these expansion projects. However, the company is very, very well run, and a big part of the risk score is at what price you're buying the stock. So because we're buying the stock at a pretty good price today, I'm going to give this my lowest score of a 5. If it wasn't trading at a nice discount, maybe this risk score would be a 6 or a 7 instead of a 5. And then my time horizon. My time horizon is holding the stock through 2028 until we see the full year financials, which should be in February of 2029 or so. So let's just call our time horizon 5 years. This isn't trading at as big a discount as some of the smaller companies that I've gone over on this channel. However, for a major, this is trading at one of the better prices I've ever seen. So I'm going to give this a strong buy. And my target share price that I'm going to go over in a moment here is going to be approximately $42. So although this gets a strong buy, it doesn't have as much upside potential as some of the other companies I've covered on this channel. However, it also has less downside risk because they're very diversified and they have very good assets and they're really well run and they have a nice growth profile and there's a lot of positives going for the company. So when it comes to the verdict, whether that's a sell, hold, buy, or strong buy, I'm looking at the overall risk reward, and I see the risk reward of Barrick today being very good. And I think that when institutional money really flows into this sector, we're going to see Barrick take off at some point. And recently the stock price has been depressed. It hasn't kept up with a lot of its peers, but I think that's going to change because Barrick has been investing a lot into their future and we haven't seen the fruits of those investments yet. Okay, and now moving on to what the share price could look like in 2028 after we've seen their growth and after we start seeing that bearing fruits. At the low end here, so this is at $2,000 gold and at $4 copper, we're looking at a share price of $21.56 using this formula that I showed you earlier. So that's a potential gain of 35%. But keep in mind, that's with the gold price going down quite a bit and the copper price going down quite a bit. At today's gold price and today's copper price, we're looking at a share price target of $32.16, which is a potential gain of 100%. At $2,500 gold and $5 copper, we're looking at a share price of $38.60. And this next one is my target price for Barrick, and that is $7 copper and today's gold price. And I think $7 copper is very realistic. As a matter of fact, I think it's unrealistic to use $4.50 copper or $5 copper in 2028 just because of what the supply and demand forecast looks like going forward. It looks like we're going to have major shortages of copper in a few years, and I think we'll see the copper price run way up. So that puts a share price at $42.07 or a potential gain of 163%. And then finally, I'm using a more optimistic target, which I did here, which came out to cash from operations of $10 billion. And that is using Barrick's ideal all-in sustaining cost, which was like $2.50 copper and $1,000 gold, and then taking a $7 copper price and gold a little bit higher at $2,500 per ounce. And that equals a target share price of $53.64. But I don't think it's realistic to assume those all-in sustaining costs, and I think it's much more realistic to assume the all-in sustaining costs that I mentioned earlier in this video. But you know what? Something that this doesn't take into account is it doesn't take into account Barrick having more debt. And they probably will have to take on some more debt to build that Lumwana super pit and to build the Reko Diq project. So maybe they have to take on another $2 or $2.5 billion of debt, in which case we have to lower our target price by about $2 or lower any one of these prices by about $2.